Hey everybody, great to be here with you for trading index options. My name is Mike Fairborn. I am not Ben Watson. Ben Watson is out. Ben Watson, I believe, is on his way to another workshop, if I'm not mistaken. But nice to be able to sit in for Ben, folks. Hope you're having a good day in the markets. Joining the chat by a good friend of mine, Cameron May, who is back again. All right, no matter what class I fill in, it seems like Cam's always there as a steady friend and colleague to help out in the chat. Welcome to all of you folks. Yeah, today I wanted to take a look. I know Ben has been, and I spoke to Ben a little bit this morning, but Ben has been looking at some of, excuse me, some of the spread trades recently. Today I want to look at maybe just a long option or even a long put on some of the index options specifically and show you some approaches to do that, looking at maybe a longer term approach tied in with maybe a potentially a shorter term approach, tying those in together, looking at some indicators for maybe some signs of bullishness or bearishness. So I'll look forward to doing that with you. You can join Cam and I on X. Excuse me. He's posted the X handles listed right there. Mike Fairborn CS, Cameron May CS, love to have you on board. Okay, let's move over to some disclosures to get going here. Now, equity and index options carry a high level of risk. They're not suitable for all investors. Information here is for general information purposes only. Now, Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper Money software application is for educational purposes only. Now, American-style short options can be assigned at any time up to expiration, regardless of the in-the-money amount. That's the ITM amount. Some key notes there. An ITM option does have a higher risk of being assigned early. For the sake of simplicity, the examples in this presentation do not take into consideration commission and other transaction fees. Be mindful of that point there. Investing involves risk, including the loss of principal, and past performance of any security strategy does not guarantee future results or success. One more slide. As you can see up top here, stop loss order will not guarantee an execution at or near the activation price. Once activated, they do compete with other incoming market orders. A quick note there too on the stop limit order as well. Now, hedging and prospective strategies generally involve additional costs and do not assure a profit or guarantee against a loss if this is not going to be discussed in the presentation. Okay, so with that, let's turn on over now into our charts and see what we've got over here. I've got my charts listed down here in terms of the index options, specifically looking at the S&P 500 index. You know, one of the first things I'll do, and I think it's true with many of you as well, is you may just look for the trend first and foremost. Where does that trend stand right now? Well, anytime you're coming off of a high, like an all-time high, for example, would be a good point there. Although we did dip a little bit lower here, we did make a new high, and perhaps we may be getting a higher low possibly coming in over here. Okay, and that would be a higher low over here. That's the question mark. You know, we could see this big potential dip down here on that DeepSeek announcement, that Chinese AI. But you can see that over here, and we did break down, but we did come right back. Now, a quick note, I am looking at trend first and foremost. I think trend can be a really, really important point, particularly if we are looking at short-term options. I'm looking with options within the next 30 days here on the index options specifically. So very, very short term, you know, oftentimes quick results is what we're looking for here. So we're going to be looking at a shorter term time frame as well. But before we do that, I am on the daily chart because I do want to look at the daily trend as well. What's happening with the daily trend? The daily trend happens to be up, right? Because we just looked at that high. And we did something interesting here because, you know, it was sort of a black swan event that DeepSeek, Chinese AI here, doing it for substantially less cost. I think it was just under $6 million. They did it for relative to, I think, hundreds of billions for ChatGPT. Excuse me, 100 billion for ChatGPT. And so that kind of shook the markets, and it impacted a lot of what's been moving the markets as of late, right? Technology type stocks. Can this be done cheaper? Are they putting too much money in? Is it too expensive? Is NVIDIA for their chips charging too much if it can be done cheaper in a different approach? And that's been kind of the question that's been looming here. But the markets themselves have popped up. Now, some of that has been due to just the breadth of the market. If we look at the SPXEW, you'll see that it has actually responded a little bit better. We're going to dive into this, and we're going to go into a little bit shorter time frame because we're going to try to ensure, or as a way that a trader would try to help to potentially increase what the perceived expectations of the price moving up quicker. We're going to take it to a shorter term time frame to do that. But the one quick note that you want to remember, I'm going to show the NVIDIA chart here too, that some traders will do this on a kind of a black swan type of an event where you get this big gap down in the market. Some will say, well, when do I get back in? Well, for the market, you may have already had a signal that some traders use in terms of not necessarily getting back in, but maybe an indication that we might have gotten past this, at least short term. And what you do is you take the first candle dropping down here, and you take the high and the low off that level. Cameron's probably sick of me saying this. He's already heard me go through this. But you take the high here, and you got the low, and you really are kind of in a trading zone within here. You're really not doing anything until you take out a major high off that gap, because there's a lot of volume associated with that, and it's going to take some real buying pressure to get above this high. Well, we did that yesterday on the market. I don't know if we've done that with NVIDIA yet, which has been a big leader really in the market, and we have not. You see, we barely got above it, but notice there was no extension day. We immediately open back below. So here's the big day on NVIDIA right here. Anytime you get these big gap downs, you want to be mindful of key resistance that might come at that top, just due to the fact that, yeah, we've got tons and tons of volume right there. It is on some big uncertainty, and that could be impacting companies like, these semiconductor AI companies, pretty heavily. So getting above that point, a lot of traders will wait for any sort of bullish indications when you cross up above those high levels first. And can you get a cross up above there and a close up above, really a close, and just at least a follow through day in there. Notice one thing here too, there's a bit of resistance that resides on NVIDIA, and it may have something to do with, possible direction in the market as well. I know the market's going up, but if you come over here and you look at like something a little bit heavier weighted that we're going to look at today, which is the NDX, we did get above it. So the basket of companies within the NDX has held up okay. There's still a bigger gap in here, and we'll see if we can close that gap. But just some ideas when you get a big black swan event. It may have been a one-day black swan event for the markets. It may affect some of these other companies a little bit longer, though, going forward. So keep that in mind. By the way, there's that SPXEW. When you're looking at the equal weight, when we're taking out maybe the impact of semiconductors in the group, pretty strong, right? Much stronger. What was the impact from the DeepSeek? Can you even see it? It was really, really, really quite flat. In fact, this looks a lot like, this could be, we don't know, but it could be, it's creating a formation, a little bit of a bull flag type formation right now in the equal weight. This is not really like a tradable index or anything, but it just goes to show that there are other companies in the S&P 500 that might be kind of picking up the steam a little bit, where the technology that led the groups higher, might be waning possibly, but the other groups might be doing better. In fact, here's our Market Watch tab. That is the 100 right here. You could always go into the S&P 500 and check that out as well. Okay, just to see what might be moving. The market's higher might be positioning for the next move to the upside. Okay, well, we're talking about index options, but I wanted to give you an idea of what could be going on behind the scenes. So one other thing we could do too, to give us a general sense of the trend, is how are we doing with some of those short-term moving averages? Now, one of the short-term moving averages that have been moving up as of late well, moves up with price, I should say. Fairly close, like on a swing trade basis or short-term basis, might be a 10-period simple moving average. You can see that right there for the SPX. Well, how did we do? Well, we dipped below it, but we went right back up above it again. Sometimes these can coincide. Prices getting above, say, for example, the 10-period moving average, you can see some strength, the type of strength that oftentimes you'd want to see if you were long an index option, like a call option specifically. If prices go above it, notice over here, trend higher, a little bit of a flag pattern, prices breaking above the 10-period, I might have said EMA, I'm sorry. Some people do use the EMA. This is the simple moving average, as you can see right up top here. And sometimes they'll use that because it just does coincide nicely with some of the strength of the moves of the market. In fact, you might get a lot of price action, the kind of price action that we're after on a long index option when the trend is up. So we've got to keep going back to that because that was really the first point we made. Hope I made that clear enough. I'm trying to establish that. The trend is up. You might get a price pattern with that. And then you're getting price, moving above, greater than your moving average over here. It breaks above higher. Okay, and that's what we're kind of looking at right now. Fast forward to the present, and I'll show you where we're at right now. Okay, you can kind of see over here, yeah, we did get the trend up, right? We talked about the trend. Now we're moving above that shorter term moving average. There we go. So we might have established here, call options as opposed to puts right now for the S&P 500 index, and that's going to extend through all of our market indices. Let's go ahead and take a look at them right now. There's the NDX. You get just right on the verge there for the NDX. Sorry, we're very, very close. It has not given us that sign yet. I'm going to go to a 6-month to really kind of let you see that a little bit better. Notice how we're below that, but getting above it is where we might start to see some strength in there if we were looking at NDX type options. Let's go through some of these others right now off to the left-hand side. The Dow. Clearly above it, the Dow is stronger. The one thing I would say at the Dow is we're kind of getting up into this resistance area now, possibly. Is there resistance? We don't know if the price will stop. This is the second day it's kind of slowed down right as we got up to this level. So that could be kind of an issue, right? It's a little bit, that trend's getting a little bit long here. Our crossover happened all the way mid January already. But you can see the strength of the Dow holding above there. Last but not least, you've got the Russell. And where are we with the Russell? Did we get a higher high over here? There's a longer term trend over here. Here was our pullback, but we did just get a higher high breakout. So the trend could be starting. We're about halfway there with the trend. The other side is a higher low. And will we get that higher low here? Well, if we can get maybe above that moving average, it could give us some signs to do so. And maybe if we were to get like a close above the high of the low day, which I think our low day was yesterday, we're still kind of flirting with that, aren't we? Not getting it yet. So we're establishing the call, maybe some calls, but maybe that call would maybe be best suited right now for the S&P 500. Okay, especially with the breadth of the market kind of kicking in gear here. Now we are getting a pullback today, but let's break this down. Now, folks, I don't know what you guys use on your charts. What I have here, I've got this established, and this can really help. It's just an awesome sort of a tool to have on Thinkorswim. I've got up here, I call this the D, the 30, and the 5. And it's just the daily, the 30-minute, and our 5-minute over here. Multiple time frames that I can quickly, on the same symbol, just go and say, well, okay, we're looking at it kind of bullish. Now, what about to the right? What about the 30-minute chart? Okay, if we were expecting prices to go higher, if that was the anticipation, do you guys spot a possible bull flag pattern here? Do you see it, perhaps? Right about in here, possibly. I'm going to put a question mark. But we could be saying the possibility of a leg coming up here. But we might want to be waiting for some possible indications for that to occur at this point. Now, I have put in over here, and I want to share this with you guys. I built this script. Now, think scripts aren't guaranteed for timeliness or accuracy. As long as the data that's coming to the platform is accurate, it can work okay. I mean, it can be effective. It's going to give you the data you're after. And this is just looking for a MACD crossover on a daily chart over the prior 3 days. I want you guys to have this. So I'm going to go ahead and just share this right now into the chat with you so you do have it. And those of you seeing this on a presentation on a recorded version, just go into the description field and then look under more. And then you can throw this in. This is a column, a custom column. It will light up green and it will give you, a 1 in here to confirm if it's true or not over the past 3 bars. I'll show you what this does, but I'm going to use this actually on a shorter term basis. I'm going to show you how that works. This is on a daily chart right now. Some of you might have this, but it is somewhat interesting. I've thrown it into the chat so you can take a look at it. It's right there. And like say, for example, Apple. What is it showing on Apple? It might be showing a little bit more strength because you had a MACD crossover, if you guys are familiar with that. I think Ben does talk about this indicator as near as I could tell. But a MACD crossover, I'll pull up Apple real quick, just as a side note for you, so you can see it real time on a daily chart. Notice you're seeing some strength with Apple here. Trend line break. What else do you see? What was the moving average we just looked at? It's there. It's that crossover. Here's the MACD2 line, so I'm looking for, with exactly the setup that we want, except I want to see a little bit of width in here. I don't know about you guys. The width is better. If you could see it, you got to be able to see this stuff. Okay, we'll go to a different color altogether on this, but let's just get the crossover line nice and clear. We'll go with a light green, and now you can see it down below. Do you see this over here? What this signifies is a crossover that's been occurring within the last 1 ... to 3 days. It can happen now. It can happen within the last 3 days. Do you see the crossover happening right there? Just as a quick refresher, the MACD2 line is a signal amplifier that can be quite effective and helpful for early indications of a possible change in trend. Case in point, we're just using this one because it popped up on our screen as a positive. Right here on Apple, let's pull it up. Not much activity happening over here on Apple, but the MACD crossed over and it held for quite some time. The exit would be a pullback. Oh, I didn't mean to go farther to the left. Sorry, it's about over here. It slid off my mouse pad, but there you go. These can be helpful. Now, what I want to do, and why I wanted to give this to you guys, is you can use something like this, still on a shorter term chart, and look for these signals, these crossover signals on that bull flag we were just looking at on the S&P 500 index. And by the way, bull flag question mark. It's a bull flag if it follows through. It had a bull flag kind of image. It's kind of setting up as a bull flag, but let's go to it again. SPX, we're on our grid over here. The 10, the daily, the 5, go to the right. Boom, there you go. Oh, sorry. I've got it. What I'll do, I'll just flip this to a 30-day, 30 minutes so you can see it. Because it's just a 30-minute chart on the same one. What are you seeing here? Uh-oh. It's telling us we're not quite there yet. Where did we get our signal? Notice when you go to a different time frame, you're going to get just different indications. You've got to be mindful of that. It's not a daily chart. The daily chart could be a positive, but where are we here? Negative. It just had a negative crossover. So we've got to be very quite careful here. The only issue is that the trend might be turning up. So if the trend's turning up, what could happen? What could happen, BJ? Wiley and all? By the way, welcome all. Great to have you here. Those of you just joining us, and all of you here. Mike Fairborn sitting for Ben Watson. Yeah, is there a reason why, by the way, Isaiah says there's a reason why the 921 crossover is used. It's a common one. That's the default. And it's just, I don't know if it was formally tested or whatnot, Isaiah. But on the daily charts, even intraday charts, there does tend to be a bit of a correlation. It's just a 9-period moving average. It's kind of like the 10-period we were looking at. In fact, this is still actually a 10-period moving average. You can use this as well. We're using a little bit of signal amplifier down here is what, the MACD is oftentimes used for. But you can see there are some similarities. We crossed over here on the 10 to the downside. And here's our crossover here. But basically that 9-period is simply our green line that's an average of the convergence and the divergence of the 12 and 26 exponential moving averages. Okay, so that's showing if the 12 is speeding up quicker than the 26 or vice versa to the downside. And that moving average is keeping track of that convergence and divergence. In other words, if you haven't looked into the math, it's just a signal amplifier. Okay, so getting back to that point, I wanted to hit that right there because you'd asked the question as I was right on it. But a quick note, the trend is maybe up on the daily chart. We looked at that. Price is coming down. Question mark. Now what's next? You know what this is? This suggests down here. It suggests maybe something like a wait. I'll just spell it out. Wait. Let it kind of do its thing. I'm going to clear this off. We're going to use the 10-period on here is a bit of a guide, and that's this. How close is price to that 10-period right now on a 30-minute chart? It's pretty close. This crossover, folks, it can flip back. In fact, case in point, look over here with me. Do you see these moves over here? Look at this. Do you see how we dipped below here? We went sideways, but we crossed right back above here. We did it again over here. Now, this crossover can occur, possibly. We might get a crossover, but there's a lot of back and forth that can occur. We're so close to that 10, maybe we're looking for a little bit of a move to the upside here before we went like on a long option, a long call option, for example. But that call option being a 30-minute chart, well, maybe we're waiting for, some indications, but we don't want to go too far out. Within maybe 30 days, a month is all. I want to look at the options next. The reason why I'm looking at this right now is because this can turn today. We're on a 30-minute chart. We saw the daily. We saw the follow through. I'm going to go back to that. I actually just need to put up this on another chart. In fact, I'm going to show you guys you guys can save this as a study, right? Or a style, and you can add this in to off different time frames if you wanted to put it like on a 30-minute or a 5-minute chart, for example. But there you go. So a couple things to look at there. But notice the daily. I mean, we're starting to, move up a little bit. I know we backed off a little bit today, but we could start up today. We don't have to, but 30-minute chart could give us that insight. So I think a MACD crossover could be interesting. Watch this. We'll go 30-minute. I'm going to take it down even more minutely. Yes, indeed. We're going to cut it down even more. 5-minute chart. There is your pullback there. Could we technically put a MACD crossover here as well to help us out? We sure could. Let's just flip this into a 5-minute, 5-day, 5-minute, and there you go. But, you could look at it early in anticipation of a breakout higher, but that's kind of what we're looking at right there. Just one second, folks. There we go. And yeah, so we're not anywhere above our 10-day moving average, and it's just so close over here, but it could turn any minute. The point is, if you get across on the 5-minute, we're not necessarily trading a 5-minute chart. It's just an early sign. It's an early indication as we go here. I'm really spending a lot of time in our discussion here to kind of the setup. And the reason is because when we're talking about options are, well, short-term in nature. And if we're talking about, I should say they're timely in nature. The options we're talking about are short-term. I'm talking within the next 30 days. Some can be out further in time, but we're looking for options on that index, not for too long, but just for these moves over here to run up over a period of time. Okay, so consider that. I'm going to take some time and look at some questions and see if I can help out at all. Let's see. Jill says, any concern on the FOMC announcement this afternoon? Absolutely, Jill. In fact, uh, waiting for that to occur, is it around 12:15 my time? Probably about 2:15, I think, Eastern time or so. But that could change the whole dynamic. And that's possibly what the market's waiting on. I think that's very, very timely. It's a good point. And that could be an indication, and waiting for that event to occur, could that impact, say, for example, that 30-minute chart over here? Could we start to see some strength come in here and move to the upside? Now, that remains to be seen. The trends are up. Remember, this was an all-time high over here that we'd seen just last Friday. So we're still very quite close to that. Okay, there we go. So that's kind of a general setup that we've got as we might take a look at some of the options next. And let's do that. Like, what kind of options could we be looking at on the S&P 500 index? Okay, so notice we got tons each day to day to day, and I know Ben's talked about this. People might trade day to day. We're just saying, hey, whatever time frame it is, we're trading within, a 30-day period, and that 30-day period is like right over here. So basically the February, the next month out. It's this weekly contract actually. But even coming down here, some might just put the cutoff here, say the monthly contract, and say maybe up to that February timeframe. I want to look at some options specifically that might fit sort of the bill of the time frame we're looking at. A quick reverse back to our charts so we can observe this. Now, if this were to go higher and break up, we might find our next level of resistance near the prior highs. Okay, so where we're at right there. How many points is that? Let me just pull this down so you can kind of see this a little bit better. From where we're at right now, if we were to run up, at my diagonal line there, if we were to run up from this level, that's about 75 points. Now, what I might want to do is put a general alert near this range. And so if we did get into an option, I'm going to right click, I'm going to go down here, create an alert at that level, at or above, and I'll just say something like resistance, question mark, put it in, create. Now, the nice thing about this is that's going to show up too on a 30-minute chart. It's going to give us a signal if we happen to be away from our computer. But if prices run up, if they do flag at some point in time and come up here, that could be, with options, a possible exit point, because options can move very quickly. We don't have a lot of time. And what else are we dealing with? We're dealing with time decay, with lack of time, right? I'm going to set this up right now in terms of a time frame. If we did run higher here, how long did it take for this flag pole to develop, the flag portion? 1, 2, 3, 4, 5, 6, 7, 8, 9, roughly 9 to 10 days. We could have 9 to 10 days on a flag over here. Let's say the flag follow through, or the follow through, the bull flag coming up to the high on a daily chart. That's really quite a ways out. But we should at least take into consideration this time frame here and then maybe double it in terms of the option we're looking at. So we have enough time and time decay doesn't hit us too hard, right? We're really looking for, the signal first, but once we get in, we need to be looking out maybe double the length of the flag pole with the expectation of it maybe taking that long to get over here. And we're just giving it even more time, right? So we're going to round this up to approximately 10 days here for the formation. We're going to times this by 2 to find the time frame for the pole portion of the flag to follow through. So that's going to put us around 20 days. 20 days out for the option, okay? Really quite short term, but let's do it. Let's look at it. We have 20 here. So here's our February, if we looked at that. So this is February 18. We're over here on the call side. And a lot of times we might be looking right at the money, maybe slightly out of the money, or right at the money. You can see there's a lot of open interest at our 60-50 contract right here, which is just above where we're at right now, about 5 points higher than where we are right now, as you can see. So if we're looking at that, what is our delta? Delta here is about 50. Oh, yeah, about 50. So I chose this one maybe out just a little bit higher out of the money, but there you go. I'm just using this as an example right there, but we can look at something like this right here. Look at the spread on that, just amazing. It was just 40 cents. Okay, or in that range, 40, 50 cents, 60 cents, whatever the case might be. It's at 50 again right there. But you can see where we're at. Volume today is at 5. But looking at the ask right there, that is your spread. What is the time decay on this guy each and every day? Let's go ahead and take a look at it. Okay. This is the price that we're looking at, but I'm gonna edge this up into a spread as well. That's what we're looking at in total. So we're not putting on this gigantic trade with all this time left. But we're looking at maybe a potential range where it could run through. And that's the next point we're going to focus in on here. But maybe something like a 60-50 for an initial or whatever we're looking at here. But then the length of that pole coming to the upside. So let's just do this. Let's go ahead and just say to our next resistance level on a short-term basis. And again, folks, this is assuming that we get an entry in here on this on a short-term chart. But we're coming up to this level here. What is that price, generally speaking? I might put it just, within there. But it's about, it's about 61.20. 61.20 to the upside, like all the way to the upside. I'm going to put it down just a little bit. That would get off there. There we go. No, hang on. We'll go over here so I can kind of highlight this. But we're starting to get into some resistance, maybe about 6105. I mean, it's getting pretty heavy through here. Notice the closing price of this bar right here started to show up. You had the high of this bar, 6150. Let's take a look at the spread over here on that and see exactly where we're at. So we're still climbing up here. Or we can just go 61. We'll just take it to an even 61 over here. I had to add up some higher contracts in there. Well, let's see, 61. I should have said 6105. Yeah. Or just 61 even. 6100 right there. Okay. So it is 6100. And what I'm going to do is we're going to buy this. Okay, but then I'm going to hold the control button down on the keyboard and look at the 61 over here. And we're going to sell this. Okay, so the debit puts us into this range over here on that trade. And we've substantially, for a one contract trade, we've with two sides to it though, right? It's a one contract, got the buy and the sell. But what we've done here is we've reduced that amount, the debit, right, pretty substantially. In fact, the margin requirement's about 2,600 and change, right? There's just below 2,700, as you can see right there. Let's go ahead and take a look and see what we've got on this, though. We've got to get to about 60.76 for a BE, a break even on this trade. You can see that that margin requirement does match our max loss. It's the cost of the trade. But the max gain over here is about 2,300, 2.3, approximately, right? Approximately, well, a little over $2,300 for the max profit. If we were to run up to that. Now, are we asking a lot on that move for that to unfold here? We're not asking a ton. This is the bigger, I mean, we're looking right at the SPX right here. And I realize, these are bigger dollar values for a contract, but we are getting some liquidity within these. You could see there could be volatility, though. We don't know what's going to happen with that DeepSeek, but we're still trying to get our timing right on a short-term basis. But I want you guys to consider this. So it's really a move. I'm going to put it down here just so you can see this line. So it's actually about 6,100, right about there. We'll replace that. We're just looking for a daily chart move of here to here. Okay, with a max gain of about 2,300. We did see the max loss is about 26. Now, that max loss, as long as the market doesn't, gap down here, have a serious gap down, and as long as the option markets are open, we can use trade management if it goes against us, right? And starts to drop lower. Now, how might we do that? Well, what about a trade below the moving average right there? What if it went against us on the daily chart? Look how small that is, relatively speaking, if we're looking at just risk. So, entry on a 30-minute. Oh, we're just getting a green bar right there. We'll get our MACD crossover and our 10-day on here in just a second. But if we break up above here and start to get moving, hey, you could say a possible exit if we go below the 10-period moving average on the daily chart. That gives it a little bit more flexibility as opposed to an in and out. If you wanted to keep things really tight, let's just go ahead and throw the 10 on here since we're using it so much. In my practice examples, as I was getting kind of set for this class, I was really just using that one chart. But for presentation wise, it makes it a lot easier to have this on. There you go. There's our 10-period here. Let's add in our MACD as well, because those are our two key lines that we were focused in on. Signal amplifier, we'll bump this up again. This way we can go back and forth between these two. I'll flip it back to green again too. There we go. All right. I'll jump into some questions here in just a second. But if we were to get an entry over here, and let's say that was a signal and we got the confirmatory crossover here, and we were okay taking this trade, well, I'm just kind of eyeballing it, but maybe the exit, let's just do this. Where is that? Well, I don't need to eyeball it. We'll just go back an arrow. Where's that exit at right now, as of today? And remember, with the moving averages, they're going to keep going up every day. Well, as long as prices collectively over that 10-period range, which they are, have been going higher, the average of this line will be going higher. So you can anticipate it going higher the next day. But right now, it's about 60-30, real close to 60-40, 6,040. That's the daily chart. Cross down. Hang on a second. Did I get that right? Where's the daily? Yeah, it is really close to that. 635. That's why it didn't look right. It's about here on the daily chart. So the exit on the daily chart, which is where the underlying trend is at, could be right there. Possibly a possible potential exit. That's break below the moving average as it stands today, 10-day moving average. Or if prices were, let's just draw this out. Prices were to go higher here, inch higher. And we got a crossover line in here that came like this. Couldn't it be easy just to use a 30-day, 30-minute chart, since that's the time frame we're looking at? If prices break back below there, that could be a potential exit. If you get a crossover here on your MACD2 line, even though it is a 30-minute still, could that be a potential exit point? It could be. Point is, folks, I'm trying to also give us some ideas to kind of keep our risk, keep eyes on our risk, keep it controllable to what we can control. We can't control a major gap down in the market, but this is a different approach. This is using a bit of a long call vertical. It's a directional long option. We put a lot of time in that first, and that was intentional. We wanted to make sure that we were trying to put a lot of focus in on that so that maybe we can get the timing right after maybe some potential indications. I mean, we might get, a K hold here, a close above the high of the low bar, not day, but, bar over here, because we're looking at a 30-minute. We might need to get a close above the 50 in anticipation, again, of that full flag pattern coming up with a target right there, which is a T1 target. It's a T1 is what we talk about in swing trading. But a lot of times that can be, it can coincide with a bull flag type pattern. If you're looking at that and we're getting right into that range, it's a very, very tight range, but there can be, well, hey, if it works out in our favor, just looking at it, as you guys saw, you know, there can be actually some pretty good gains that can be made very quickly if we call that right. I do like the point that was brought up earlier the about the well, the economic announcement or FOMC announcement coming later today can be very, very important. Okay, I'm looking at the chats. It's like Cam's got us caught up. Appreciate that, Cam. Let's see. Any questions, folks, that you got in the last just 2, 3 minutes here? Let me know, and I could try to address those. Why not tighten the spread and trade more contracts? Now, you could do that, Jerry. You could absolutely do that. I did tighten it a little bit from like a T1 target range over here. The T1 might be up even above this high, right? We're just looking at like a bull flag pattern, maybe coming back on a daily chart, that is. And so this is kind of like a long-term daily, right? And we're looking at the coming up to the daily chart range, but we're using a 30-minute to help us out. That's kind of the area that we've kind of targeted up here. I did lower it though. Yeah, and you can lower it even more and increase the contract. Sure, sure. Let's do that right now. Case in point, let's do it right now. Let's see what that looks like. We can increase the contracts and go from there. And let's see what that does to our max loss as well. So instead of that trade, we're going to use the same entry over here, okay, at this level. And let's just go out like, we'll keep it real close to Jerry's point. We're going to go out just a 10 wide here. I know that was way far out, but did it give you some ideas maybe? Maybe not. We dropped it quite a bit. It's 570 now. And so per contract. Now, of course, we've dropped the max gain down, or the max profit right there. You can see quite a bit. But to Jerry's point, let's go over here and let's bump this up. In fact, let's just do like 3. There we go. Okay, so we've got this range in here. That's our max gain. That's our cost. That's just our margin requirement there, about 16.5. And then you've got the max profit right there. Okay. So that is an approach as well. Now, this could be used. Definitely. You got to put in more contracts. With more contracts, obviously more, there could be obviously more commission charges associated with it. We're looking at 6 now. But that does make it definitely smaller and easier to kind of swallow, so to speak, in terms of just the amounts that we have to put down. So I'm with you on that, Jerry. You could raise that, you could lower it around your risk reward kind of feel on this, and just the amount that you're willing to risk on it as well. But we just did a 10 wide on that. In fact, you could even shrink it further if you wanted to a 5 wide and go from there as well. Those are kind of a longer term range. Some ideas. I realize, the further out you go, because it's an expensive underlying, 6,000. That does ramp up the price pretty significantly, pretty quick. But yeah, good. Great stuff. Let's see. Anything else we've got here? Can we quickly review last week's? I don't have that trade. I apologize. I sat in for Ben here on a short notice to cover this class, but I wanted to give you guys some interesting ideas. What is the name of the MACD crossover field? Oh, this name over here? Oh, that we plugged in previously? I just have it. Okay, so it's just MACD underscore crossover. So if you import that, that would be listed there for you in that name. So when you go into right click up top here and you go down and customize, you could find it in here. Just, MACD underscore, boom, crossover. You got it right there. Does that make sense? Then you'd post it in here and you could take a look at it there. I actually go into quite a bit more detail on that in the swing trade class. And so you guys, I brought in today just a number of the swing trade techniques that we actually use on stock and options, but really on equity options, more than anything. So I'm going to pull this up real quick so you could just see this. This is shoot, sorry, I clicked on it. The swing trade playlist right there. It's a new class, so we're really just on our 4th class, but if this is of interest to you, you can get some of those additional rules that we have. It's a little bit trickier, I'd say, doing it on index options as opposed to stocks, but There are ways to use it. In fact, the same sort of approaches can be utilized as well. I'm going to go ahead and just throw that into the chat if you want to check that out. Did one yesterday where we went through some of the rules and some of the money management on swing trades as well that could be incorporated, folks. If you like today's presentation, do me a favor, smash that like button. It keeps this content coming up for us more frequently, and definitely consider subscribing to our event as well. Again, you can follow Cam and I on X, Mike Fairborn CS. Cam May CX, thank you very much, everybody, for attending. Have a good rest of the day, and hope we did shed some light on some approaches to doing long options in here. We narrowed it all the way down to that tighter spread that Jerry had mentioned on that long call vertical. With that, folks, we'll see you next time. Bye-bye.